Welcome to Cryptocurrencies, the Future of Digital Money show at PortfolioWealthGlobal.com. My name is Michelle Holliday. What an amazing January for cryptocurrencies. Bitcoin crashed radically from $20,000 down to $5,900 and is now up over $11,000 again. And many altcoins endured even wilder volatility. So much talk about a bear market and so many emotions in play. Today we are talking to Bitcoin legend and one of the early crypto investors, Mr. Trace Mayer. Trace holds degrees in accounting and law and has studied Austrian economics. He started recommending Bitcoin around 25 cents, a cryptocurrency industry market cap of $2 million, before its rise to a $110 billion market cap in June of 2017. Trace has funded core blockchain infrastructure, including Armory, which provides the foundational security for Bitcoin wallets, BitPay, the largest Bitcoin merchant processor, and Kraken, the largest Bitcoin Euro exchange and a major worldwide liquidity provider. He hosts the extremely popular Bitcoin Knowledge podcast, where he interviews the top people in the Bitcoin world. In a similar way to Portfolio Wealth Global's dual effort to find undervalued altcoins for our subscribers of our free newsletter, which has been ranked number 1 in the fourth quarter of 2017 for cryptocurrencies, blockchain performance, and quality in the world for our alert of Hive blockchain technologies at 74 cents, which outperformed all cryptocurrencies throughout entire months. Tom Beck's complete research on Hive blockchain technologies can be found at PortfolioWealthGlobal.com/must. And we just released an interview with the company's chairman, multimillionaire fund manager, Mr. Frank Holmes. Now, without further ado, Mr. Trace Mayer, welcome to the show.
Oh, thanks so much for having me again. I think this is wonderful. I hope we can give some good information and helpful analysis for the listeners.
I always love having you on because your analysis is excellent. Trace, the first and foremost important question: do you still hold to your view of a $115,000 Bitcoin price in 2018?
Well, first, it's not something I put out there as something I hold, that it'll happen, but something that's possible. And the way that I come into, the realm of what is going to be possible is I look at something that Preston from the Investors Podcast, he created this whole website called MayerMultiple.com based on my analysis of what he's named the Mayer multiple.
Wow.
And with that, yeah, I know exactly. It's like, I did not name this myself. I'm not like that. But anyways, like how we, and he picked up the principles for this, from multiple podcasts and interviews that I'd done. But what we do is we take the current price and we divide it by the relative price. And one of the reasons I like doing that is we're able to cancel out how we're measuring things. So in this case, we're canceling out the dollar sign, right? Because we have the current price of, say, $11,200 like it is today, and then we have the 200-day moving average, which is around $8,500, and then that gives us a ratio or a relative price. And then what I like to do is I like to take that relative price and I like to look at the standard deviations. So when is it 1, 2, 3 standard deviations outside of the norm on either side? And if it's 3, say it's 3 standard deviations outside the norm to the upside, for example, the number might be 3.7x, like it was in middle of December, then I would kind of say, this looks like Bitcoin is now overvalued because this relative price is so much outside of the norm in terms of this 200-day moving average ratio, this Mayer multiple, basically. And so that might be a good time to sell for some other coin or for some other asset. And on the other side, if it's 3 standard deviations outside on the low side, like say it gets to 0.77x like it did about 2 weeks ago, where we had Bitcoin at $6,600 and the 200-day moving average around $7,500, I would be like, oh, that looks like it might be a good time to buy Bitcoin because it's undervalued or it's cheap. So, this is a way that I like to look at when any asset, because you could apply this Mayer multiple to any asset, any way that we're doing pricing, because it's just a mere technical analysis or technical indicator based on market prices. Not that it gives us it doesn't tell us anything about the value of the asset, other than it might be cheap or expensive relative to past price performance. So you still have to do a fundamental analysis. But if you've done a fundamental analysis, and like with Bitcoin, I've laid it out with the 7 network effects. You've got speculation, merchant consumers, security, developers, financialization like CME futures or ETFs, and then world reserve currency asset. So if you like the fundamental analysis, and whether that's for Bitcoin or Apple stock or Berkshire Hathaway or Wells Fargo stock or whatever, if you like the fundamental analysis and you're like, you know what, I want to buy this asset. Well, you make money when you buy, and you want to buy stuff when it's cheap, not when it's expensive. And so what might be some technical analysis or indicators that we can do to figure that question out of the timing of when to buy or when to sell? And so that's what that's how I apply this Mayer multiple. And so when we look at, and it helps us understand the probabilities, the probability set that's out there, of what might happen. And so when we look at, when we extrapolate some of this analysis out for 2018, then we're at $8,500 200-day moving average right now. It's rising significantly every day, $60, $80 a day. It'll probably keep going up quite a bit because we had that $17,000, $19,000 run in December. And so then, you might look at June, July. I mean, if we have a 200-day moving average in July, that is, say it's up to $14,000 200-day moving average, and then we get to 6x that ratio. And when we look at the past performance, like the previous really big runs, like when it ran from $32 to $250. Well, the relative price got up to about 8x. And when it ran from $150 to $1,200, remember in like November, December 2013, it got to 8x again. So if if December comes around and the 200-day moving average is around $19,000, and we run to 6x on the Mayer multiple, that gives us $115,000 price in terms of US dollars. So it's not that like I think that this will happen. It's, hey, look, this is now kind of within the realm of possibility based on how this asset has performed during its short life, because remember, it's only like 9 years old. And I really kind of only look at the data going back about 7 years, because that's when we got more significant exchanges and volume happening on the asset. So that's a little bit of how I've come up with that like $115,000 number. Like I didn't just roll some dice or pull it out of the air. It's like, no, let's look at everything that's happening in the past with Bitcoin. Let's look at the adoption that's going on, and at least try to make some reasonable guess about what might happen in the future. Which, if we see significant movement in terms of the futures, in terms of the hedge funds, in terms of the banks clearing all these futures and settling them, if we see favorable regulatory stuff happen, we could just see a mountain of money come into Bitcoin, and it's limited in amount. Like, you can't just make more of it, right? So it has this very, very explosive to the upside pricing potential, because when that price starts to move, everybody likes to chase the rabbit. For some reason, people seem to really like to buy Bitcoin when that Mayer multiple gets high instead of when it gets low, which is the exact wrong time to buy. You should be selling when that multiple is getting very high. You should be buying when it's getting very low. So that's how I kind of approach the whole price prediction arena, because otherwise it can get very, very hectic and very crazy.
Right. And just like stocks, whenever a new one is launched, they're always very low. And then they begin to make their climb, and then they naturally drop. And then when they climb again, sometimes they go much higher, sometimes doubling and tripling. So the fact that it has dropped, I see as indicative of not just a beautiful opportunity to buy, but it reflects what naturally happens to an investment. And you make such a great point about the explosive money that could be coming into this sector in the future as the stock market starts to see more and more companies come online that are focused upon blockchain technology.
Oh yeah, I mean you got this, you got stock market, like publicly traded Bitcoin companies that are trying to come online, but really like a bunch of the Bitcoin companies that are private are doing incredibly well. Coinbase is extremely profitable. Kraken's extremely profitable. We've got hundreds of exchanges out there. They're basically just printing money. We have just an explosion of financial innovation that's going on. I mean, with Bitcoin itself, in terms of the fundamental analysis, we're looking at huge stuff. Segregated witness got activated. We have Bech32 addresses. We have MAST, which is a Merkleized abstract syntax tree. We got Taproot. We got bulletproofs. We've got Schnorr signatures, which is a form of signature aggregation that we can make using the block space more efficient. We have Dr. O'Connor's paper about simplicity, which is a blockchain programming language. We've got covenants. We've got confidential transactions that can increase the anonymity or fungibility of Bitcoin. We've got UTXO commitments and proofs. We've got fraud proofs. We've got bulletproofs. We've got the Dandelion protocol, which helps increase and obfuscate the transaction origination. We have Neutrino, which can help speed up Bitcoin. We've got Rootstock that goes, on a sidechain but brings smart contract functionality. We've got Lightning Network. Lightning Network is going to be absolutely humongous as it gets adopted and rolled out because it increases the speed and lowers the cost at which people can engage in Bitcoin transactions in a trustless way. So, just the amount of financial innovation that's going on and the value that that's going to add and create, at the end of the day, like the market's a weighing mechanism. And one of the reasons, and you bring up a great point about stocks and stuff, they'll IPO and there'll be some widely varying swings in the price. I think what that indicates or what that shows is a disagreement among people in the market about what the asset is worth. And why is there disagreement? Because there's asymmetric knowledge and everybody makes a different analysis and everybody has a different way of thinking about how much something is worth and why it's worth that and all this stuff, right? Well, I don't necessarily think it's a bad thing that we have differences of opinion. On Twitter, I actually put out a quote by Ludwig von Mises, and in there he says, thus, the total costs of production, including interest on the capital invested, lag behind the prices which the entrepreneur receives for the product. This difference is entrepreneurial profit. On the other hand, the entrepreneur who misjudges the future prices of the products allows for the factors of production prices which, seen from the point of view of the future state of the market, are too high. His total costs of production exceed the prices at which he can sell the product. This difference is entrepreneurial loss. So what Mises is saying there is, look, everybody's got asymmetric knowledge, and the people who make a correct assessment of the future state of the market and the prices that are going to exist there, they're going to have profits. And the people who misjudge that, they're going to have losses. Okay? And so, let's look at GE stock, for example. 2 years ago, one Bitcoin would buy 13.5 shares of GE. Today, one Bitcoin buys around 600 shares of GE. And the same could be said for JP Morgan stock, right? And so Jamie Dimon, CEO over there, you look at his net worth, he's allocated it to JP Morgan stock. And he's getting completely obliterated in terms of his performance relative to Bitcoin. So he gets to suffer the entrepreneurial losses, and the people who allocate capital, like his daughter, to Bitcoin, they get to reap entrepreneurial profits. And,
That's funny, like his daughter, right?
Oh yeah, because he effectively called people who invest in Bitcoin stupid. So he called his own daughter stupid. But like when you look at the scoreboard, she's vastly outperforming him. So who's really the stupid one? And so he's living within this cocoon of self-satisfied self-deception, thinking that he's correct in his analysis, but the scoreboard doesn't agree with him. He has entrepreneurial losses, whereas she has entrepreneurial profits. And that's how the market works. The market does not care what your opinion is one bit, right? Like, you should not put ego into your portfolio. It will be deadly for your financial performance. You have to be very humble and attempt to be very objective when it comes to pricing and trying to understand all like what's going on when you're making these decisions. And at the end of the day, you either have profits or you have losses. And that's just how the game works.
And it's so incredible and exciting to know everything that's going on around Bitcoin, all of the vast, new, explosive innovations. And that's just today. It's a baby industry.
Oh, right. It's a baby industry. It's very complicated. This is stuff developed by PhDs in math, statistics, physics, computer science, distributed networks. So there's this huge gap of knowledge, which if you don't have some of this fundamental understanding of what's going on in the space, like JP Morgan, like Jamie Dimon has no clue how Bitcoin actually works. Where would he have allocated the time and developed that type of human capital, right? And so he's at a huge information disadvantage because he just doesn't, he hasn't allocated his capital to kind of understand how this stuff works. It's been around 9 years, so there's really no excuse for people. If they wanted to know, if they wanted to learn, they would have done it already, right? But because there's such a huge gap in the knowledge, I think that helps explain a little bit about why there's such a huge gap in the pricing. When you think about it, this thing has been nuts. We do like 10, $20 billion of volume a day. That's a very large stock, and yet $17,000 in middle of December, $19,000 in middle of December, and then $6,600 in early February. This is a huge swing in the pricing, which I think is a result of widely varying opinions on what the future price of Bitcoin might be. And then, people are going to get entrepreneurial profit and others are going to have entrepreneurial loss. And, and you're either like scoreboard, you think you're so good at allocating capital, prove it. Like, what's your scoreboard say? It's a very simple game.
Trace, from your perspective, can Bitcoin become a global reserve currency?
Well, that's that's the seventh network effect that I laid out. That's ultimately probably its destiny. And why do I say that? Because when we're looking at, how are we going to establish trust in 20 or 30 or 50 years? And the way we're going to establish trust is most likely going to include asymmetric encryption, kind of like how we establish trust today when it comes to IPsec, HTTPS, when it comes to, SHA-256 to protect classified information. There's a whole information system security standards industry. Like, how do we establish trust? And that's what Bitcoin is. Bitcoin is a trust establishing machine. It's, why do you trust this instead of trust that? Well, you trust Bitcoin because, one, there's proof of work. Two, there's a distributed network, and we've had something like 190,000 full nodes connect to the Bitcoin network in the last 30 days. And the Bcash, or the Bitcoin Cash network, which is supposed to be another big digital protocol currency type thing. It's had like less than 100 full nodes or something like that are actual economically substantive, not just run by a single entity on Alibaba. So it's censorship resistant, it's immutable, it's highly decentralized, it's got a lot of economic mass, it's a trust establishing machine. And so when we're looking at establishing trust, like what is the world willing to pay for trust in 30, 40, 50 years? I mean, the world pays a lot for trust when you think about it right now. We have governments with legal code that establish property rights. We have banks and investment managers and custodians of assets, and we have escrow companies, and we have we have contracts, and we have the entire legal industry around all of this. I mean, the world establishing trust is a very valuable thing to society because it enables us to engage in more trade. And our society, the scalability of our society is directly related to how well we can establish trust and how we can do that in a cheaper, more efficient way. And Bitcoin is a tool that enables us to establish trust in much smaller ways for much smaller costs. And so, we'll be able to have smart contracts, and you'll be able to pay for a news article with a fraction of a penny's worth of value, which we can't currently do because we don't have infrastructure like with credit cards or whatever to process payments in that small of a denomination, right? Or we'll have smart contracts where you'll have an apartment building and you'll have all the lease contracts will be smart contracts, and whether people pay their rent or not will determine whether they can actually open the door and unlock the smart lock that's associated with that. And when you want to sell that apartment building and all those leases, you'll be able to do it atomically in one transaction in the Bitcoin blockchain or on some type of second or third layer that has been built on top of it. And so I mean, it's like when we look out into the future of where this could go, I mean, what other thing out there could possibly help us establish trust in a better way? And I don't see anything on the horizon that could challenge or rival Bitcoin's network effects at this point. And the network effects all exponentially reinforce each other. And so when we looked at the original internet come out, and then we saw, we had different protocols that eventually got the network effects like email, SMTP. And then on top of email, we got stuff like Google, with Gmail or Yahoo Mail. And we also, and on top of HTTP, we got other companies like eBay, with auctions. And so that was just one network effect between buyers and sellers. And then they layered on a second one with PayPal, so they had buyers, sellers, and payments, so they had two network effects. And, I mean, do you know how many companies are in the auction graveyard for trying to challenge eBay? And they couldn't overcome those network effects. And Bitcoin has 7 network effects instead of just 2, and they're all exponentially reinforcing each other, and it's censorship resistant and immutable, and it's got the security. I mean, the Bitcoin network is using more power annually than the entire country of Argentina. I mean, this thing is a beast. It's an absolute freight train. I mean, why would you trust Dogecoin instead of Bitcoin? I mean, it's laughable. It really is laughable. I mean, they're not even comparable, really, in terms of. I mean, they're nowhere near each other's substantiveness, and so Bitcoin is just this massive freight train that is barreling down the tracks. It's getting more mass and it's going faster. So I mean, I don't see anything that could possibly catch up to it.
This is just extraordinary. Some of the points that you mentioned, I mean, even about blockchain technology having an influence upon securing rental properties, things that would never naturally occur to someone but are in the future because blockchain technology is literally limitless.
Well, yeah, I mean, because our abilities as humans or Homo sapiens, what really distinguishes us from other animals and stuff is our ability to abstract, because that's a type of tool that we're able to use. And so when we're looking at Bitcoin and we're looking at math and computer science, like, we're really dealing with a realm of abstraction. And so what we can do in terms of abstracting other stuff onto all of the software code, it really is limitless. It really is. Like we can I mean, yes, there's going to be aspects of our society which will need to run on what I call wet code. That's the code that's between a judge's ears. It runs on our brains, the lawyers and the judges on their brains. But then we have dry code, or we have software code. And so this is going to be our smart contracts and the types of stuff that we're going to be executing on these internet protocols in order to establish trust. And if we experiment in some other altcoin or whatever, and it works and it does well, we're just going to pull that right back onto the Bitcoin blockchain and merge it in. If it's safe and adds value and doesn't degrade our security and performance, why not add it? Right? So how in the world would some altcoin be able to outperform Bitcoin in terms of the network effects? If it actually starts working and doing something good, we'll just copy it all and merge it in.
But speaking of that, Trace, stepping outside of Bitcoin just for a moment, right now, are there any other altcoins that you see that are underneath the radar but are still very, very promising?
Yeah, I mean, there definitely are a few of them out there. So what we saw with Bitcoin Cash, with Bcash, is we saw the first kind of very large scale fork, not just of the software code, because we'd seen lots of that, because pretty much all of these altcoins use the Bitcoin core code as their fundamental foundation. But we saw a fork of the UTXO set, or the balances, with Bcash, and that was successful. And since then, we've seen a whole bunch more. We've seen Bitcoin Diamond, Bitcoin Super, Lightning Bitcoin, Bitcoin X, Bitcoin World, Bitcore. We've seen a bunch of these. And when I look at them, what's really distinguishing them? And for the most part, nothing at all. In a lot of cases, you've got these shady developers and Chinese exchanges and miners basically all working together, and so they'll pre-mine it and then they'll trade it on the exchange, and basically they're trying to scam people out of their Bitcoin by selling them a worthless fork or altcoin, right? But in some cases, we actually have some fundamental innovation that's happening there. Like with Dash. I interviewed Evan. He's the lead developer with Dash. I interviewed him about almost 3 years ago now. And Dash was $3. Now it's over $700. It's outperformed Bitcoin by a factor of 6 in that 3 years. So one, it's really difficult for an altcoin to actually outperform Bitcoin, because why not just put your money in the safe one, right? People who try to trade between all these things generally eviscerate their portfolio. So it's better to just buy and hold Bitcoin and not even have the coins on an exchange or whatever. But Dash actually outperformed Bitcoin over these last 3 years. And they came up with an innovation with these master nodes, which I found to be a very interesting project, and a very interesting thing that changes game theory and economic incentives and helps bolster the infrastructure of a network or whatever. And we're starting to see a lot more coins that do infrastructure changes like this, like Smart Cash. In August, Smart Cash was less than a penny, and now it's 30 cents. So it's outperformed Bitcoin in the last 6 months. Who knows whether it'll continue to, and it's had all types of technical problems and stuff. But that's what's happening when you're innovating at the forefront of all this stuff. You just get some really widely varying moves. Another one that I find really interesting is Bitcore. I'm trying to figure out why it's been performing as well as it has, because Bitcore has done 2 forks of the Bitcoin UTXO set. So basically, everybody who has Bitcoins gets Bitcores for free, and then they've done this airdrop thing. So you get 6% airdropped every Monday in terms of Bitcores. So if you had 100 Bitcores, on Monday you get 106, and then the next week you get 106 times 0.06, right? So you get this compounding effect. And 6 months ago, Bitcore was trading at around $1.50, and today it's trading at 22. It hit 30 over the weekend and then dropped because of the airdrop that just happened here on Monday. But that's an example where, the there's just so much going on in terms of like the inflation rates and the interest rates and the supply and the infrastructure and the incentives and the game theory. I mean, there's just so many different ways to play around in this space. And hey, if you calculate correctly, you get profits. If you calculate incorrectly, you get losses. And, that's just it's fun because real money's at stake on these opinions.
And it's sort of the wild, wild west at this moment.
Oh, yeah, definitely the Wild West. I mean, I don't know if we want to talk much about regulation and stuff like that, but I mean, it's huge, huge Wild, Wild West. And hey, when you're dealing with monetary sovereignty, people either have it or they don't. And if they have it, then they can do what they want with it, right? Because they have it.
Just a note to our audience who are exploring the wild, wild west of cryptos. Portfolio Wealth Global's top altcoin picks of 2018 can be found at portfoliowealthglobal.com/top 5. That's TOP and the number 5. Trace, what is the biggest risk right now to cryptocurrencies?
Oh, I mean, I don't think there's any risk to Bitcoin. I mean, it's just an unstoppable, massive freight train. When we start getting to some of these other altcoins and stuff, I mean, yeah, there's significant risk there. One is do you actually have wallets that are secure with code review that are going to be a good place to store your, if you're going to speculate in them, you need a secure wallet to do it in. Otherwise, they might get stolen, right? Or they might just be lost because there's a bug in the wallet. And I mean, this is not a joke. Like with Ethereum, you had the parity wallet, which had multi-signature. There was a bug in it, and they locked up over $150 million of Ethereum.
Oh, wow.
I mean, it's all fun and games until your money just gets locked up, right? And it's because there was a bug in how they and this was people put the Ethereum into put it into a contract that was managed in their parity wallet, but it was somebody completely disconnected. I mean, didn't have access to the wallet or anything. They just issued a command to the Ethereum network and it locked up the money. Right. So it was a software code itself and how the contract was written, and is actually really fishy, almost like the wallet developer put it in there intentionally, which would be funny because he actually the same wallet had a different bug where people actually had about $150 million stolen of their Ethereum. And so, a great way to increase the price of your coin, everything else remaining equal, is to just destroy a whole bunch of it, right? So if you can put a wallet out there that's just bad and it destroys everybody's money that they put in it, it decreases the supply, which redistributes the wealth to all the remaining coin out there. So, I mean, people have to be extremely careful, both with the security of the wallet, with the security of the network, all these types of things. But hey, that's what's happening. We have massive research and development going on right now, and people actually get to bet on all of these. Most of the ideas will be complete failures and flops, right? And so, expect to lose money if you're going to dabble in all of these altcoins and stuff like that. But on the other hand, man, some of them are just, they are really outperforming. Well, one, they're outperforming all your traditional assets, so that's fun. But some of them even outperform Bitcoin itself, which I don't know that it justifies taking the risk of moving out of an extremely safe, secure coin like Bitcoin, because that's your opportunity cost, right? Like Bitcoin and deep cold storage. And what I mean by that is you're running a full node with Bitcoin Core. You're storing your private keys with something like Armory. You're generating and storing them there. You're using the Glacier protocol, which is like a 95-page PDF that walks you through all the landmines and how to avoid them. And you're using custom hardware that perhaps doesn't even have a Wi-Fi card or networking components on the operating system, something like a Purism laptop, right? And so, just developing the human capital to properly secure your crypto assets is, that's a significant homework assignment for people. But, if you've got this core holding that's in deep cold storage, well, like when these forks have come out, I mean, in 2017, like let's go down a list of the free money that people got from forks. We had Byteball, we had Stellar, we had Bitcoin Cash, we had Bitcoin Gold, we had Bitcoin Diamond, we had Super Bitcoin, we had Lightning Bitcoin, we had Bitcoin X, we had Bitcore, we had Bitcoin Faith, Bitcoin God, we had Bitcoin World. There's a ton of them, and I mean, this is not trivial amounts of money. It's probably if you had taken all of these forks and bought Bitcoin with them at the time, based on the current Bitcoin price of $11,200, you would have probably an extra $5,000, maybe $6,000 of fork proceeds. So, I mean, this is not a trivial amount of money that has come in with all of these forks and stuff. But people have to have the technical competence and the ability to safely and securely claim these forks. Otherwise you risk losing your Bitcoins. And I was reading a post by one guy who, he tried to claim one of these forks, and not only was he unsuccessful claiming the fork, but the software he used was actually malware, and it stole his 36 Bitcoins too.
Oh no. Oh God. And I'm laughing, but that's tragic.
Yeah, I mean, it'd be funny if it weren't so sad, right? Mm-hmm. But it's an example of he just didn't do his homework, right? Like, so you want to come in and play around in this space. I mean, do your homework, figure out how to secure your keys. I mean, I think that's perhaps one of the best places people can, that's where you're going to get one of your best returns, is investing in yourself, in how to understand and properly and safely secure your keys and everything. And then once you've been able to figure out that and do that, then you can begin to venture outside of that extremely safe, secure territory that you've now taken. You can venture outside of that and take additional territory, on a fork or on an altcoin or on whatever, but I'm just very much, hey, let's be super safe and secure first, and then figure out whether we want to speculate or not.
Right. Now, Trace, let's shift gears just a little bit. Where do you see fiat currencies 10 years from now?
Yeah, I mean, that's an excellent question. One is like, why do we, what is the future for this US dollar altcoin? The software code is closed source. It's not available to everybody. Bitcoin software code is available to everybody all the time. Bitcoin is limited in amount. The US dollar altcoin is not. In fact, we don't even know what the emission schedule is for the dollar. It just changes with the political winds, right? Now we've got over $20 trillion of debt, and interest rates are starting to rise. So what's that going to do to the budget deficit? Which means that, the end game for that is they're going to have to monetize the debt, which, what does that mean? That means that the emission schedule of this altcoin is just going to go insane. How often is there a hard fork with the dollar? It can happen anytime, for any reason. They do it all the time. They'll change a law the Bank Secrecy Act. They're able to exert pressure on people that are custodying your keys. You can't custody your dollars yourself. You can with physical cash, but that's about the closest you can get in terms of reducing the risk profile. Because, I look at it, in terms of cybersecurity, I don't want to trust if I don't have to. Like trust minimization. Like, why extend trust if you don't have to? And second, I just prefer not to trust at all. I'm going to verify. Don't trust, verify. And so, you look at the dollar, you just have to trust so many people in so many different steps of the chain. I don't want to trust any of them. One is, I don't think that they're honest. And two, we've found tremendous breaches of They have an abysmal record. Here, I'll give two examples. One was the proxy vote for Peltz to get on the board of Procter and Gamble. I don't know if you remember what happened here, but Peltz, activist investor, wants to get on the board of Procter and Gamble, and so you got to vote with the Procter and Gamble shares, right? And it actually got fairly contested. It got so highly contested that there was litigation, and they spent over $40 million trying to properly count the votes from the shares. And finally, the people that were that did not want Peltz to get on the board, they finally just gave up and let him on board because it would be too expensive to properly count the votes.
Oh my gosh.
I mean, think about how crazy this is. We should know exactly how many shares of Procter & Gamble are issued, and we should know exactly who owns them. Like, why? Like, if you own a share of Procter & Gamble, why don't you know that you own the share?
Oh.
Right? I mean, why do they have to spend $40 million fighting over what the actual vote is? Now, I mean, they did multiple recounts, like trying to accurately count these votes. They spent $40 million trying to do it. What that shows is that at the end of the day, nobody actually knows who owns what. Nobody knows who owns the Procter & Gamble shares. Because if they knew, they would be able to very quickly and efficiently vote, right?
It just leaves someone speechless. It's so outrageously absurd.
Oh, totally absurd. I mean, absolutely absurd. I mean, with Bitcoin, you can sign a message and you can cryptographically prove, because you're signing a message with the private key with those Bitcoins, right? So you want to vote? Boom, it's done, and it's cryptographically provable, right? I mean, there's no forging that signature. Okay, so that's one case, was Procter & Gamble. So we don't even know who owns what, like with Procter & Gamble shares. I mean, it's really crazy because this is like a blue chip company, right? Billions of dollars of market cap. Okay, so the other case, and this was actually in the Delaware courts, it was Dell Foods. And what happened with Dell Foods is there was a tender offer, and people had something like 49 million facially valid Dole Food shares that entitled them to the tender offer consideration. Now, the problem is that Dole Foods had only authorized 36 million shares. See the problem here?
I see the problem.
So somehow 13 million shares of Dole Foods got created out of thin air and were facially valid on people's brokerage statements, when only 36 million had been properly authorized.
I just don't see how the generation right before our Bitcoin generation, I don't know how they lived. I mean, when you look at the way, and this is no disrespect to anyone, but when you look historically at how our money has been manipulated and created, it's like, what are they doing?
Exactly. What are they doing? And we're talking about shares of a company. We're not talking about the money. I mean, when you get to the money, oh, that's a whole different game of three-card Monte, right? But we're talking, I mean, this was a $295 million case in the Delaware courts. Basically, over 30%, 13 million shares out of 36 million just created out of thin air. So there were 49 million shares of Dole Foods. And these are on facially valid, they're facially valid on brokerage statements, like with TD Ameritrade or E-Trade or whoever, right? I mean, these are supposed to be regulated custodians who are supposed to be like following regulations that when you buy a share in your brokerage account, you actually get a share. I mean, this is insane, right? Like, so you're supposed to trust E-Trade and you're supposed to trust DTCC. No. I don't want to trust anybody. I want to verify mathematically and cryptographically that I have the asset.
Right.
I don't want to trust any of them. Why? I mean, why should I extend trust when I don't have to? We're now in a world where we can cryptographically and mathematically verify whether we actually have the Dole Food shares or not.
The age of verification.
Yeah, we're moving into the age of decentralized, immutable, censorship-resistant verification. That's how we're going to establish trust. Okay, and when I want to trade my cash for Dole Food shares, you're going to have the Dole Food shares, and it's going to have to be mathematically and cryptographically provable, and I'm going to have the Bitcoin, and we're going to trade it in the same transaction atomically. So my Bitcoins move only if your Dole Food shares move, and they're cryptographically linked in that transaction, in the mathematical equation that's getting solved, right? That's what when you ask your question about world reserve currency, that's the world we're going into. And so, when we look at the current money, it is absolutely insane. Like so Alan Greenspan, he testified twice before Congress that central banks, plural, stand ready to lease gold should the price rise. I got into gold before I got into Bitcoin. And I had my website run to gold, and I wrote like hundreds of articles about it, right? And I'd never run into this behavior before. We have a price that's being suppressed, not supported, and not by users, but by owners, and not for the obvious reasons. It's very odd behavior. If you own a lot of something, why run a cartel to keep the price down? Doesn't really make a lot of sense. But the incentive becomes obvious. The power for the central banks to issue what we use as currency is infinitely more valuable than the price of a portfolio asset of the gold, right? And then, so I was like, oh man, there's a lot of opportunity here to disrupt the money and currency markets, because we're using a fiat currency where we don't even know how many there are. We can't properly track them or trace them. Built on top of that, we've got an entire financial system that we're not accurately tracking shares of stock or bonds or any of this stuff, because we had naked short selling, and we had FTDs, failure to delivers, and we have all this kind of crazy stuff going on. And so I was like, oh, I think I'll invest in gold money, goldmoney.com. And I was talking with the founder of Gold Money, and he's telling me a story about when they started up Gold Money. And guess what they did? It's a very simple business model. People would wire money into Gold Money, and then they would decide to buy gold. And so Gold Money would wire the money to the bullion bank, and they would take the gold bar that they paid for in full. They would take the gold bar and they would put it in their own cage. But it's all in the same vault. They just wanted to put it in their own cage, right? Like in the Gold Money cage, not in the JP Morgan cage or the other, whatever the bullion
the
vault,
mystery cage.
The bullion bank is, right? This was his business plan. So he wanted to go buy gold bars from the bullion banks in London, right? And he wanted to have his own little cage in the vault that he would pay rent for and for insurance and everything. And so when he bought a gold bar, he would put it in the cage. Well, guess what? All the bullion banks told him, that's not how we do business. You cannot take possession of the gold bar, even in the same vault, and put it in your own cage. We don't specifically allocate the bars of gold that way down in the vault.
Well, how do you know you have your gold?
Exactly. You know what they eventually had to do in order to get the business started? Some of the shareholders in Gold Money, they were also big shareholders in gold companies that mined gold down in South Africa. So they actually had to set up relationships with those gold mining companies and buy the production as it came out of the gold refining company. Because the bullion banks would the bullion banks would sell them gold, but they wouldn't let them take possession of it. Okay.
Wow. Right.
And that's how Gold Money got its start. But with gold, gold is very expensive and cumbersome because you have to, it exists at a certain place and point in time because it's an atom, right? It's a precious metal. It's an atom. And when you're gold mining, you're just searching through a bunch of dirt to find these precious atoms. But then once you've got it, I mean, it costs money to verify it, to verify the quantity and the quality of it. I want to know it's 0.999 fine, and I want to know how many ounces, right? With Bitcoin, every transaction, you effectively melt down the Bitcoin, verify its authenticity and quantity and quality, basically, and then recast it into a new bar. And we're talking over $20 billion a day of Bitcoin gets melted down and recast every day, right?
Wow.
Like, how much that would cost to do with the gold mining industry? Like, if we wanted to melt down and recast gold bars every day, $20 billion worth, it'd be very expensive, and it would add a lot of friction to the trading process and everything. And yet with Bitcoin, we're able to do that extremely efficiently and cheaply and everything like that. So, gold, but why do we produce gold as a society? It's because we need something that is censorship resistant, portable, immutable, limited in amount to perform this economic calculation. And something that has a form of proof of work. Gold definitely has a proof of work because you have to drill 2 miles down into the earth to dig this thing out, right? Like, it's very difficult to just create, to just get a bar of it. And so, but what we don't have with gold is we don't have a ledger that tells us exactly how many atoms of gold there are and in what addresses, right? And like where are they actually located? We don't have a ledger like that with gold, like we do with Bitcoin. So Bitcoin provides this level of transparency for just so much cheaper, so much more efficiently. It's so much more portable because it's a number. So you've reduced the value to data that can transfer over a communications channel, whether that's a satellite, whether that's a ham radio, whether it's a fiber optic cable, radio waves, whatever you're doing. So Bitcoin is just, it's like, where's it going to be in like 50 years? That's the question the world is asking right now. The world is asking, what is money? And it's rethinking what money is, because, all these stocks, at the end of the day, those stocks are supposed to be property rights for assets and cash and the ability to generate and produce cash and everything. So what is money? Because that's what we price everything else in. And it's either the dollar, it's gold, or it's Bitcoin, or it's something else. But I have no idea what else it could possibly be. So we've got 3 contenders in the ring, and right now Bitcoin is like, it's just pummeling all of them.
Verification and transparency.
Yeah, censorship resistance, immutability, security, verification, transparency. These are all things that the market desires. People want to know whether they own their Dell Foods shares or not in their IRA or in their pension fund.
Right.
I would think people would. Otherwise, why'd you work all these years and buy something? Well, you thought you bought something is really what it comes down to. You thought you bought something, but you didn't actually verify whether you bought that thing. Maybe the cost to establish that form of trust was just too high for you.
And that's the tragic side of things, Trace, because as we laugh, because it's just so ludicrous the way that people have handled the monetary situation, the truth is these people, when they're sitting in a room with a table of 20 others and they're actually playing with the lives of many thousands of people who have worked all of their lives to save and to invest and to put their money into what they thought was safety for their future and their children's future, and it's just gone.
Well, you say thousands, but with the degree of recklessness and maliciousness that has happened in the monetary and the financial system, we're talking about hundreds of millions of lifetimes of value that has been misallocated, stolen, wasted. When we interfere with the monetary unit in a society, it's just so dangerous to society. Even in the United States, in the 1792 Coinage Act, it provided that any federal employee that debased or made worse the currency, people working at the mint, shall be guilty of a felony and shall suffer death. We have the death penalty for this type of behavior because it's so dangerous to society. And yet now we massively reward people for engaging in that behavior economically.
It's true. We bail them out.
Will the pendulum swing? China executes people on a regular basis for financial crimes. And so, that's definitely a question that we as a society might begin to ask, because, people work their whole life and poof, it's gone, and they might get angry. None of the big bankers have gone to jail yet. They've all the big banks have been convicted, even criminal stuff. But show me bankers who have actually gone to jail, let alone been executed.
Yeah, the gravity of this, it's almost unfathomable. So we tend to laugh about it when we look at the absurdity of it, but the real life effects that have destroyed so many people's lives is truly tragic.
Yeah, it's very tragic. We're talking about lifetimes. These are people that, instead of spending time with their kids growing up, they were at the office, right? But the thing with Bitcoin now is you can opt out of that system. So you really have no one to blame but yourself anymore. If you get taken advantage of and you go play 3-card money trying to own Procter & Gamble shares or Dell Foods shares or whatever, you have an opt out. You could just have Bitcoin that you've verified that you have.
Right.
Right. Well, so it's why are you playing that game? Why'd you go to Vegas again?
Trace, staying on the track of verification and transparency in investing, our company, Portfolio Wealth Global, recently uncovered an incredible opportunity with a publicly traded company which has found 4 separate ways of monetizing blockchain. The company mines on behalf of clients for a fee. They created a fleet management service on the blockchain. They supply management for a cannabis company and fraud forensics and accounting for businesses who don't know how to report correctly. They started trading on Wednesday, and our subscribers are already up by 50%. The company is called DMG Blockchain Solutions. The complete overview for our audience is at portfoliowealthglobal.com/chain. It's our number 1 diversified blockchain play for 2018. The management is coming from Bitfury, Uber, and Cisco. My question to you is this: do you see talent leaving other businesses to join the blockchain industry?
Oh yeah, it's happening on a massive scale. Just the quality of people that are leaving, the traditional financial industry, other companies coming into blockchain, because that's where the money's at, right? It's like the 1849 gold rush. Now, whether people actually want to invest in, a lot of the speculative things in this area, I'd be very careful about that. But yeah, it's just pulling so much human capital, because we're going to rebuild the monetary and the financial system of the world. So it's going to take a lot of human capital to do that, and a lot of very talented and skilled people.
Trace, from your perspective, how would you like to see the world in terms of government authority and central banking?
Well, I think that, we have separation of church and state. I think it would probably be a very good thing to have separation of money and state. And that's really what the founding fathers tried to do with the U.S. Constitution. And when we have this monetary sovereignty that vests with the individual instead of vesting with the state, then we can have a much more efficient and accurate pricing mechanism that takes place that delivers the goods and services that society wants to fulfill their needs. Things like healthcare and food and technological innovation and all of this stuff. So, I think having very strong property rights and this monetary sovereignty, Cato or Heritage did a study about it. They found that countries that have very strong property rights have 20-year longer life expectancy, and the populations are generally much happier and healthier. So, I think, I like the idea of people being happy and healthy and prosperous and free. And I think we get a lot more productivity out of people when we have things like that, a lot more, people are just providing a lot more market services and satisfying a lot more needs that way, like heart surgeons and brain surgeons and stuff like that. And so, having property rights and monetary sovereignty, I think, is a very essential aspect of that. And so having a separation of money and state where we haven't politicized and weaponized the monetary unit. I mean, look at like the banking blockade against WikiLeaks, using the monetary system to silence political speech. What's next? Religious speech? We had Operation Choke Point, the 22 industries, not just companies, but 22 entire industries, check cashing, pawn shops, porn, cannabis, whatever it is, like totally legal businesses, but the Department of Justice leaned down the financial services providers and said, don't provide them any financial services. Right? No court orders, no prosecutions, just totally informal weaponization of the finance and monetary systems. And so if we don't have our monetary sovereignty, how do we really assert our other rights, like freedom of speech, freedom of religion, et cetera, right? We have to have our monetary sovereignty. And so having this separation of money and state, I think the founding fathers of the U.S. were very wise in how they applied that through the Constitution. And we saw the benefit of it. The greatest wealth creation engine ever. The average daily income was something like less than $1 when the U.S. was in today's purchasing power when the U.S. was founded, and now people are making $60,000 a year on average.
Trace, it has been an honor to have you on the show. You are always so amazing. You're such a wealth of knowledge. How can our listeners follow you and keep up with your work? And please tell us all about your amazing podcast for anyone who may not have heard it yet.
Oh, yeah. So my podcast, Bitcoin Knowledge Podcast, www.bitcoin.kn. I interview the top people in the Bitcoin space, CEOs of the different companies. So it's really for them and for the listeners to get an idea of what's going on in the space. And then Twitter, I have my just at Trace Mayer on Twitter. And so people can follow. I like that fun, kind of like our president, stir up some trouble on Twitter.
Right. Trace, thank you so much for taking the time to join us.
You're welcome. Thanks for having me.
Mr. Trace Mayer, Bitcoin expert, investor, and host of the Bitcoin Knowledge Podcast. For Cryptocurrencies, the Future of Digital Money show, I'm Michelle Holliday at PortfolioWealthGlobal.com.